That constant feeling, right? You know, whether it's maybe your streaming bill creeping up or you go to the hardware store and the price tag looks, well, a bit steeper.
Yeah, definitely. Or just, your money doesn't seem to go quite as far.
Exactly. We're all kind of feeling that pinch of rising costs.
We are.
And it makes you wonder, what's happening on the other side for businesses?
Uh-huh. How are they dealing with all this?
Yeah, how are these widespread cost increases hitting them, and what can they even do about it?
Well, that's exactly what we're diving into today.
Yeah.
We're looking at this piece from Dab Marketing.
Okay.
It's called Raise Your Prices, Why It's Time, and Why You Can't Afford Not to.
Right. Sounds pretty direct.
It is.
Yeah.
And it tackles a really critical issue, for anyone trying to get a handle on the economy right now and just the pressures businesses are under, big and small.
So our mission for this deep dive, then, is to pull out the key insights from this article, get past the headlines, and really understand the why and the how behind businesses thinking about raising prices right now.
Exactly.
So, look, if you've ever wondered why stuff just seems to keep getting more expensive, or maybe you run a business yourself and you're wrestling with these exact decisions.
This is definitely for you.
Yes, stick around.
So the article starts by just laying out the scene, the economic reality we're in.
Okay.
Inflation, tariffs hitting imported goods, just general costs going up across the board.
Like what sort of costs?
Well, things like raw materials for manufacturers, shipping and logistics, those costs have surged.
Right.
And even basic stuff like energy, utilities,
Yeah.
it all adds up for business. The whole financial picture has really shifted.
And I guess the first reaction, maybe from a business owner or even us looking in, is, okay, just absorb it.
Yeah, tighten the belt.
Right. Try not to pass it on to the customer.
That's a really common feeling.
Yeah.
You want to keep your customers happy. Maybe you're worried about competitors. But the article really pushes back on that. It argues pretty strongly that just absorbing costs indefinitely, well, it calls that survival thinking.
Survival thinking, meaning?
Meaning it's not a winning strategy for the long haul. It might feel right in the moment, but it can actually hurt the business more down the line.
Okay, interesting. So what's the alternative they're proposing?
Well, a core argument, and it's pretty blunt, is about the cost of goods. COG.
What it costs to actually make or get the thing you sell?
Precisely. And the point is, when that goes up significantly, adjusting your prices isn't just like an option. It becomes necessary.
Necessity for survival.
For sustainability, to keep the business healthy.
Gotcha.
And they use a really interesting example to illustrate this, Microsoft.
Oh, yeah. With what?
The Xbox Series X. They're raising the price by $100.
Wow, okay. $100. When is this happening?
May 1st, 2025. And here's the kicker.
Uh-huh.
The console will be 4 years old by then. And there's no big redesign announced, no major hardware upgrade.
Wait, really? So just a price hike on older tech?
Yep. Just going up.
That does make you stop and think. Because usually, like the article points out, tech gets cheaper over time, doesn't it?
That's the standard expectation, yeah.
Yeah.
Especially if there's nothing new added.
So what's the logic? Why would Microsoft do that?
Well, this is where you see those current economic pressures really biting. Microsoft is likely making a calculated move here.
To do what?
To protect their profit margins, basically. The gap between what it costs them and what they sell it for.
Because their costs have gone up too, presumably. Components, shipping.
Exactly. Keep pace with their own rising expenses. And maybe subtly, it also kind of reinforces the idea that the Xbox is still a valuable product.
It's fascinating because, yeah, normally you'd think older tech, you'll lower price, but maybe the rules are changing a bit.
It definitely signals a shift. Even huge companies are prioritizing keeping those margins healthy, perhaps over sticking to the traditional price depreciation model we expect.
It says a lot about the current climate.
It really does. It makes you think about the whole life cycle of products, especially durable goods, in times of inflation.
Okay, so that's a big tech example. The article brings up another market too, right? Something about trucks.
That's right. Yeah, it looks back at the truck market from a few years ago.
What was happening there?
Well, we saw huge price increases, significant jumps.
On new trucks.
New and used. In some cases, used trucks were selling for the same price as they were new, or sometimes even more.
More than new. How does that even happen?
It was a perfect storm, really. Not just rising material costs back then, but massive supply chain disruptions.
Ah, the chip shortages and all that.
Exactly. Production delays, couldn't build them fast enough. But crucially, demand stayed really high.
So lots of people wanted trucks, but there weren't enough to go around. Basic supply and demand pushing prices up.
Precisely. And the key point the article makes here is how the market reacted.
What did they do?
Dealerships didn't really hesitate. They raised prices to match that dynamic.
And people paid.
They did. Because the perceived value, the need for the truck, was still strong. Demand was solid. The market just sort of adjusted, found a new level.
That's a really clear example of price elasticity, I guess. People were willing to pay because the value was there for them.
Absolutely. It shows how prices can adjust when the underlying value proposition holds up for the customer.
Okay, but let's shift back to the business owner's perspective. Actually making that decision to raise prices, that can feel uncomfortable, can it?
Oh, definitely.
Like, are people going to think I'm just being greedy?
That's a huge concern, and the article tackles it head on.
How?
It tries to reframe it. It suggests thinking about raising prices not as greed, but as, well, responsible business management.
Responsible? How so?
Responsible for the long-term health of the company. It's not just about boosting profits today. It's about making sure you can actually continue to operate.
Right, so you can keep paying your team.
Exactly. Provide for your employees, secure the company's future, and importantly, maintain the quality of whatever it is you sell or do.
Ah, that's a key point. Because the alternative might be cutting corners, right?
Precisely. Using cheaper materials, reducing service levels, things that ultimately harm the customer experience anyway.
So raising prices can actually be about protecting quality, in a way.
That's the argument, avoiding that downward spiral.
Does the article mention specific types of businesses where this is particularly critical?
Yes, it does. It calls out service providers, for example.
Like plumbers, electricians?
Yeah, people whose own supply and equipment costs are going up. Also, retail shops, like supply stores.
Because their vendors are charging them more.
Right. They're getting hit with price hikes constantly. And manufacturers, too, dealing with raw material costs, import fees.
So for those kinds of businesses not raising prices, that carries its own risks.
A much bigger risk, the article argues. It's a direct threat to their quality, their profitability, and ultimately their ability to even stay in business long term.
Okay, so it's about being proactive, not just reactive, taking charge.
Yes. Leadership in, well, pretty volatile times.
Does it suggest concrete steps businesses should take if they're considering this?
It does. It emphasizes not getting frozen by uncertainty, but taking clear, informed steps.
Like what?
First step, audit your cost of goods. Really dig in and understand exactly where your money is going.
Know your numbers.
Absolutely. Second, analyze your margins. See how much those rising costs are actually squeezing your profitability right now.
Makes sense.
And third, think really hard about the true cost of serving your customers at the level they expect. What does it actually take to deliver that quality?
Okay, so you do that analysis. Then what?
Then, based on all that data, you ask yourself a key question. The article puts it very directly.
Which is?
Am I charging what this product or service is genuinely worth today?
The today part is important.
Crucial. Because things change. Costs change. The market changes.
And if the answer to that question, after looking at the numbers, is no,
Then the article's conclusion is pretty straightforward. It's time to raise your prices. Or at least seriously consider it.
it really brings it back to the basic purpose of being in business, doesn't it?
It does. And the article is quite clear on this.
What's its take?
It says, basically, businesses are in business to win.
Not run as charities.
Exactly. Now, that doesn't mean gouging customers, but it does mean acknowledging the need for financial health, sustainability, the ability to invest and grow.
So less emotion, more data.
That's the advice. Take a breath, look at the data, and make the call.
And it ends on a note of encouragement.
Yeah, a really empowering message, especially for business owners listening.
Yeah.
Basically, charge what you're worth in today's market. Don't apologize for building something strong, valuable, and, built to last.
Okay, so if we boil it all down, the main takeaway from this DAB marketing piece is?
I'd say it's that raising prices right now isn't automatically greed. Often it's a necessary, even responsible business decision.
Driven by real cost increases.
Exactly. It's about adapting to reality and making sure the business can survive and thrive long term, not just grab quick cash.
And those examples, the Xbox and the trucks, they really stick with you.
They do. They show how markets do adjust, and sometimes consumers understand, maybe implicitly, the pressures behind those adjustments.
It definitely makes you think differently about the prices you see everywhere, doesn't it?
Yeah. When you see a price go up on something you buy or a service you use.
You realize there's a business owner behind that, likely facing their own rising costs and making some tough calls.
Which leads to a good final thought maybe for you listening.
Yeah.
Think beyond just the price tag you see right now.
Hmm.
Consider the long-term value, the sustainability of the things you rely on.
Mm.
And maybe ask yourself, does understanding the pressures businesses face, does that change how you view pricing at all?
That's a really interesting question to ponder. We hope this deep dive gave you a clearer picture, a more nuanced view of why businesses are facing these decisions.
Yeah, and the kind of strategic thinking that goes into navigating these tricky economic times.
Thanks for exploring this with us today.